Welcome to the weekly option. This is your host, Eric, and this is the video to explain or sort of overview the trades that the new trades that I discuss on the new podcast for March 26, 2021. So we're going to start off with the covered call option. Looked at the VIX, which is the CBOE Volatility S&P 500 index. And we'll flip over actually first to a chart. Here's the chart of the VIX. Now, this is volatility. Volatility has been significantly low for quite a while. So much so that if you look at where we're sitting right now with volatility, volatility represents this green, our current price represents this green line. So there have been lower lows, right? But now we're on this line that appears to have been support in December, support in February as well, and we're hovering around that same price right now. So I actually wouldn't be harmful owning this right now, especially given the price isn't too bad. So with this covered call, you'd be buying the underlying stock and then selling the wow, it's funny. Prices have since moved. I was looking at selling this April 20 call option at $2.75, I believe is where it was when I looked at it earlier. With prices having moved down a bit and widened out, maybe they got word of my podcast already. But I normally do the show on the weekends, so this is just the reality of dealing with the live market. So, but essentially, I was looking at buying and then buying the underlying stock and selling this call option. Let's go ahead and take a look over to our next one, which is EWZ, which is the MSCI Brazil Index. This one appears to still be relatively in play, albeit 2 cents tighter. So looked at with this, looking at doing a credit spread. So we would be selling the 32.5 call, buying the 33 call. So even if you did that right now, you would still collect 19 cents. And I think that still makes for a great trade. In fact, I might go ahead and add to my position. And let's take a look at the chart. We'll just type in EWZ here. So here's the chart. So I don't mind selling that call spread right now because we've had a lot of choppiness in this market. And when you look at 2020, even though, I'm going to get rid of the volume just so you can see it better, even though there have been some moments like this last month or the last few weeks have appeared to go higher, it seems to be push high, drop again, push a little bit more, and I would expect it to continue its current fall. So I like the idea, really selling a call spread is a bearish move because you're selling an instrument that appreciates when prices go up. So with me looking at seeing this price go lower in the chart, expecting it fully to go lower, then selling this call spread seems to fit right into that. And I like the fact that I can still collect 19 cents. When I initially was pricing it out, it was trading for 21 cents. But still being able to execute this at 19 cents is a good trade, I think. So if you sold it at 19 cents, and these are, by the way, this is the benefit of watching the video because you're getting different numbers and different reality, different analysis than you get on the podcast as well. But selling this at 19 cents, you would still have the possibility of losing 31 cents. However, that's so the numbers are a little different than on the podcast, but I think it's still a great trade. So definitely worth considering. And then our final trade on the week, I believe, was on Wells Fargo. Let me make sure we're out to actually. Let me go back to EWZ real quick. Make sure we were on April 16th. We were not. How about that? Okay, great. That makes me feel better. So I was on the wrong expiration. Way to go, Eric. All right, here we go. This is the April 16th expiration. And I'm going to return to the VIX too. The VIX, that was the right expiration, but I want to point out something with that. But these are the numbers shown in the show. And it was 21 cents. So selling the 32.5 call at $1.15 and buying the 33 call for 94 cents. So you're always selling the bid and buying the ask for anyone who's somewhat new to this. And that's where the 21 cents came from. And so all the numbers on the show are correct. My previous trade that I just looked at was done for the actual weekly option. That's the April 09. So the option's expiring on the 9th of April rather than on the 16th. I do like to discuss monthly options on the show. So you actually would collect a little bit more. You collect 21 cents for selling this one as opposed to 19. But you do also have one extra week of exposure. This one expires in 3 weeks. The previous one, the April 9th, is 2 weeks away. All right, now we can go over to Wells Fargo, which is the third trade of the week. We're going to go ahead and take this to the April 16th expiration. And I don't know if you caught that, but all of these are expirations that are available. So monthly options expire on the third Friday of every month, and that would be April 16th. But you have all of these other options that are considered weekly options, and that's why they are here. So you want to make sure that you're in the right option chain. And I'm looking at buying a call spread on this one. So let's take a look at the Wells Fargo chart. It's actually a nice little chart. So we've had a nice up move for quite a while. And even though we're a little lower right now, I think we're just seeing another like little pullbacks. When you typically have an up move, prices don't just go higher. They'll go up and pull back a little, up, pull back a little, up, pull back a little. And I'm expecting prices to go higher from where they are right now. Even though we are still sitting pretty nicely in the stock market, I think we could hover in this space for a while, given the actions of the Federal Reserve Bank, given the actions of the legislature around, or I'll just say the executive and the legislative branches of government around just being willing and making it clear that they're going to continue to create stimulus to stimulate the economy. That means that all systems are still a go, and they're trying to breathe life into the system again. But while that's happening, we can make some money. So I'm looking at buying this 38.5 call and selling the 39 call for April 16 and Wells Fargo Bank. So you'd pay 196 and sell 163, and that's where you come up with the 33 cents for this 50-cent wide spread, which means that your maximum profit is going to be 17 cents. So thank you so much for watching this video. Sorry it was a little crazy on the front end, and I did promise to go back to VIX one more time, and I did choose the April 14th expiration. This is a weekly option, and let's just look at this. Yep, April 14th expires in the morning, and prices are just all around right now. So for that VIX, I was looking at buying the VIX and selling this call option, which, unless I'm going crazy, just moments ago was showing different prices. So with this 20 strike being offered at $2.40, this actually makes for a great trade because I can tell right off the bat when I sell this call, I'm locking in. I'm right from the start locking in a situation where I've got a good shot at keeping a 10% return on this stock, right? Or on this trade overall. So you'd buy stock, sell this call option for $2.40, and that's the covered call for this as well. I would normally edit this video to eliminate my mistake early on, but I'm going to leave it in just so that you guys see that I am human as well. I don't walk on water, but I love talking options. So I'll talk about any trade anytime, and even if it happens to not be the trade that I intended to talk about. So that's it for this video. Thanks for putting up with my horrible sense of humor as well. Hey, if you haven't already done it, two things. Please subscribe to the podcast, right? So I love seeing new people hear the podcast, but also subscribe to this YouTube channel. So I'm going to be adding more content, more trades. You get to follow along with me as I actually make trades on this channel. So that's it. Thank you so much for reaching out. Thanks for following along with me. And as usual, happy trading.